Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to give you my weekly update on my real money North American portfolio for the week 9 of 2021. And I want to start with my transactions last week because since the market dipped a little bit in the mid-week, I did some buys. And so I bought some more shares of Electronic Arts on March 4th for $131.71. I bought 4 more shares to my current position. And I also bought some more shares of Intel. It's already my biggest position in my portfolio, but since it dipped also quite a bit this week, I bought also on March 4th another 10 shares for $58.51. And last but not least, I also bought more shares of these two guys of Berkshire Hathaway. I bought 2 more shares at a price of $246.33. As I mentioned also in my other videos before, I will add to my position in Berkshire Hathaway over time, a little bit here, a little bit there, just because I think it's the best long-term investment, at least if you are happy with a return of, let's say, 8 to 10% per year. And why did I bought them? Just because they are under the intrinsic value. I told you Berkshire way under the intrinsic value, but also Intel and Electronic Arts are under the intrinsic value. And just to have an overview over all my positions and their intrinsic value and what's the price right now, I just built an Excel sheet for myself just to know at every time if I maybe have to sell when price gets exuberant, or as right now, just add to my current position. And with that, to the news of the week. And the biggest news of the last week, I think, was that it seems like the bubbles burst, the bubble in tech, but also the bubble in the EV, or even more the bubble in the EV sector. When you look at the charts of these companies, of the high flyers of the last year, then this looks really, really ugly. And I also made 2 videos about that and how to handle that. Just check this out on my channel. And just for example, here Tesla now dropped to $597, and this is 32% from the top, and this is quite a bit. And it will be very interesting if this is just a dip or maybe really the bubble burst. But then also the Chinese EV stock NIO just really crashes over the last few weeks, almost 40% now to $38. But not just that, also the tech stocks like Apple lost already 16%, and also Zoom, one of the high flyer in the pandemic, just lost over 42% already. So it seems like the big party in the tech sector and especially in the EV sector could be over. And at the same time, my portfolio just rise and the performance gets better and better to now 55.88%, which is an outperformance of over 32% to the S&P 500 since the 2nd of December 2019 when I started this North American portfolio. And this just shows the strength of the value companies I have in my portfolio. There's not a lot of tech, not a lot of hype, almost nothing, just very stable, profitable companies. And I will stick with that, and I think this is a way to build wealth over time without the hype. That's the way to do it for me. And if you like this idea, then just subscribe to my channel and follow me on my road, and you get insight every week on my portfolio, and plus a lot of stock analysis, 1 or 2 per week. And with that, just take a look at the weekly performance of my portfolios. And in the last week, especially yesterday, the big winner was Leggett & Platt, a very, very boring business company. I put a link up here on the screen with a deeper analysis of all the business. And by the way, you find on my channel analysis to all of these businesses where I go through the financial numbers, through the management, then calculate the intrinsic value and tell you when and why I bought my shares. And so Ledger & Platt was a winner of the week. American Express also very good. Imperial Oil still good. Maybe you remember I sold my Chevron stocks with 60% of gains 2 weeks ago. This seems like was a mistake at the time, but I'm still in the oil sector with Imperial, and this looks very, very good. And on the losing side are the gaming stocks like Activision Blizzard and Electronic Arts. But also here, I'm very happy to be owner of these two businesses because they're just great companies with a good market position in their segment. And so I will just hold, and as I told you before, I just added to my position in Electronic Arts. And then there was also some cash flow into my portfolio last week, because I received dividends from Intel of $36.33, from Wells Fargo $6.71, and from Pfizer $26.19. So also quite a bit of cash flow, and that's nice all the time, of course. Last but not least, take a look at my overall performance since the 2nd of December 2019. My stocks performed like that. So the big winner, Caterpillar, of course, with almost a doubling, and then Walt Disney, American Express, and so on. On the downside, Jack Henry, Pfizer. I will hold to both of them because both of them are great companies, very stable, very profitable, and so I'm not worried about that. I will just stick with it. There is no reason to sell. And also here a view on the pie of my portfolio, and you see my cash position is at 21%, which is a little bit too much. I would like it to have it around 15%, but it's really difficult to find good businesses for a reasonable price in an overall still overvalued market. And so I sit a little bit on this cash, but of course all the time I'm looking for possibilities, and maybe if we are really at the start of a correction, then maybe I will buy more of my current positions, or even on new companies, because I also have a watch list. Also, you find a link to the playlist of my watch list here up on the screen, and so all the time I look for new opportunities, of course. And as I said before, with this strategy and with these companies, I have a performance of almost 56% since the 2nd of December 2019, which is a massive outperformance to the S&P 500 so far. And of course, this is just like 15 months, so maybe not that much, but at least a very good start. And I will just go this way with very profitable, stable companies, and just let compound their earnings and compound my gains over the long term. That's the way to do it, and so I'm very happy so far. I would be also happy if the market drop a little bit and there is a good chance to buy into other great companies, or even add to my current positions. But we will see. You never can time the market, of course, and so I'm just happy to be in there into great companies, and we will see when there will be new opportunities. And of course I will inform you every week what I did, and so I hope you just stick with me and you like the idea at all. So thanks for watching. That's it for today. If you like the video, if you like the whole idea, subscribe to my channel, ring the notification bell to never miss another video, and then also please give me an update or a feedback, because today I used my new microphone because I got the feedback from another subscriber that my sound before was terrible. So I hope now it's quite better. I would be very thankful for feedback on that. So see you in the next days with another analysis of another stock. See you then. Take care. Bye bye.